What's up, traders? Welcome back to the channel. Let's go ahead and take a look at Bitcoin real quick as some interesting things started to happen. Last week in the overall stock market, we did have a nice push back to the upside, whereas you can see Bitcoin was rather weak. We did get a nice bounce on Thursday off of this daily support right here, but then ultimately on Friday, we sold right back off, closing under daily support, and you can see here on Saturday, we are currently struggling at old daily support, which could ultimately end up being resistance. Only time will tell. Now, we do have CPI this week. That'll be on Wednesday. Before we get to that, we'll have PPI, which will be on Tuesday. And then we have retail sales and a few other pretty heavy news-related items for this week. So it could cause a little bit of volatility. Moving over to the S&P 500. I do have your measured moves here as far as the close. Now, I can't get into Thinkorswim right now because they're doing updates, but as far as the close on Friday, they were expecting a $67 expected move. Now, that is important. Obviously, last week we had a $62 expected move, and that was with a almost $15 VIX. Even though we have a higher expected move this week as far as we're $7 wider, since the VIX is down like right back down into the 12s, I do have a rather bullish stance longer term on this marketplace. Now, since Bitcoin did ultimately sell off on Friday, depending on how the weekend looks, like if say this ends up holding and then Sunday we end up dropping a little bit further, then probably Monday I would be okay with looking for a short entry, but I would only be looking for a short entry down around the lower edge of the expected move. I'm not expecting this to roll over and continue to be bearish. We are not seeing that in any data. And I'm going to take you through some data to show you. But for right now, I mean, just where the VIX is currently and as well as where the Skew is currently, there is no heavy hedging activity or heavy call selling activity, heavy put buying activity going on, which could mean that, overall we could get a small pullback into this area or something, and then you could see this thing rally coming out of Tuesday and Wednesday going into the end of the week. But yeah, there is volatility in the markets. Even though the VIX is low, you can see it closed at 1256 there on Friday. We did have some pretty hefty volatility. If you can look right here on this, right, we did end up pausing there, opening up on a Monday and then blasting through, breaking down below the weekly expected move there. We actually breached above the upper edge of the expected move there. Down here we held, and then this week we broke out above the expected move. So for the last 4 weeks, we have had breaches of the expected move, either to the downside or to the upside. This move up right here has literally pulled all of the steam out of the VIX. So, with that being said, we're not looking for massive volatility next week. But if we could get a move down to that bottom edge of the expected move, this is probably where I would start looking for long entries, whether that be selling puts, whether that be buying calls, or whatever, spreads, however you want to play it to where you're definitely managing your risk. But that's probably the move that I'm looking for next week. If Bitcoin continues to sell off, then maybe that might change my overall bias on the overall marketplace. But as long as the VIX remains at these low levels, then I am not going to be looking for a market reversal. All right. Remember, the VIX needs to be increasing in price for us to look for bearish moves. As long as the VIX is down, as long as the Skew is low, we don't really look for the volatility in the markets. Now, the Skew did kick up a little bit here, but it's pretty much hanging down here around the lows, or, around these lows down in here. We did bounce off of that 130 area, and we are back up to 137. But it's not a high enough bounce to cause any concern. Now, if the Skew continues to rock up, which, usually that's the way it works. When the VIX goes down, the Skew goes up. But if we do get a pretty sizable move in the Skew, then we will start to look for hedging positions. But as of right now, everything still looks pretty bullish for me. All right, so that's the more or less longer term duration of the way I'm going to play the markets. I'm going to remain bullish, but with the, Monday coming in, maybe look for a little bit of that downside Monday into Tuesday, depending on what the PPI says, and then look for that low edge tag on the CPI. If the CPI comes in line with expectations, we don't currently have a expectation on the overall year over year number, which is the headline number. We went from 3.2 to 3.5. I would expect it probably to come in, seeing how oil, this is going to be for April. You can see right there, April. Since we did have a lower move on oil, it was not a $10 move, it was a $7 move lower in oil. So I would expect the forecast to be around 3.4, no lower than 3.3. All right. So 3.4 is where I think you're going to get your forecast and where I think it's probably going to come in line with. But if it does go into the 3.3s, then we could see that, rather exaggerated move to the upside. So once again, this is the weekly range we are looking to play inside the broader marketplace, where maybe if Bitcoin continues to sell off into, today and tomorrow and coming into Monday, we'd be looking for the S&P 500 to come down into this region right here. And then ultimately, if we come in line with CPI on Wednesday, we'd be looking for that bounce back up into and around all-time highs. We're not seeing tech really have a magnificent rally. We're actually seeing that magnificent rally come in from the XLP. So here is the XLK sector versus the XLP. This is tech versus consumer staples. And we did get that, that nice move to the downside, and it is struggling a little bit to retain any bullishness. So as of right now, the bullishness that we are seeing inside of the S&P 500 is actually coming from financials, which you can see there's that big, huge boost there, almost back up to all-time highs. And the majority of this run came from Goldman Sachs. I'm going to go into Goldman Sachs. You can see huge run here in Goldman Sachs, absolutely blasting above the all-time high with continuation. JP Morgan did not really get as big of a move. Both JP Morgan and Goldman Sachs are within the XLF sector. So the XLF and the XLP is where we are starting to see that bullishness. Now, the XLP here is in a larger term range. All right. So you can see this range that we're in here, long-term range. And we are coming to the top edge of that range. So there is a possibility that we do find a little bit of resistance up here. But this is a large consolidation formation. And it's just, in my opinion, a matter of time before this ultimately breaks out and starts to make fresh all-time highs. So as long as we still remain strong in the XLF, remain strong in the XLP, I would say the majority of that move is coming from more of the smaller companies inside the S&P 500. Well, we can see that here on the RSP. This is the equal weighted S&P 500. This is very important because it takes the heavy weighting of tech out of the asset. So this is basically every stock inside of this 500 stock ETF has the same weighting. And this is a constructive look. This does look like a smaller near-term pullback or correction inside of a broader long-term potential breakout from the same thing. A very sizable range here. This is a massive consolidation range, and we have broken out of it. So if this is to get bullish continuation, we literally could see this thing get a measured move and look something like this. Like we could be looking in the $200 region for this to get to for the rest of the year or going into 2025. So yeah, as long, with the RSP looking like it's getting ready to break out, with the VIX being down at the low areas, like back near the bottom edge of the range, if you did want to hedge your portfolio and start buying some VIX calls, it probably wouldn't be a terrible idea, but make sure you're not buying a lot because this is probably going to continue to go lower. As long as the market continues to rally, you could see the VIX get back down into the $11, $10 area. The way everything is structured to me currently, the way everything looks to me currently, outside of Bitcoin is looking like it is lagging, which is, it is what it is. Bitcoin usually does trade with tech, and seeing how tech is a little bit laggy right now. That could be why we're seeing Bitcoin struggle a little bit, why the S&Ps are about to make fresh all-time highs. Now, if Bitcoin has a massive breakdown, then that's going to change a little bit of what I'm thinking, right? Because, Bitcoin is one of those major risk-on assets, and so it typically will rotate back down before the S&P 500 usually, but not always. Obviously, it can trade on its own. So you guys have a fantastic rest of your day. Make sure you guys trade safe. Coming up this week, make sure you trade safe, trade smart, and as always, happy trading, everybody. I will do live streams as long as the internet provides the ability for me to do so.